Good afternoon. Good morning if you're on the West Coast like me. Welcome to the briefing, a co-production of Now This and The Appeal. I'm John Matthews, and I'm excited to be joining our guests today. Today, we're going to be talking about oversight of the multi-trillion-dollar economic stimulus packages. Huge companies are claiming billions of dollars while continuing to funnel millions into dark money campaigns with the same massive salaries and bonuses to executives as ever. We'll be joined by Representative Katie Porter from California's 45th District, Damon Silvers, the policy director of the AFL-CIO, Bharat Ramamurti, a member of the Congressional Oversight Commission, the 5-member panel tasked with monitoring how the corporate bailout is spent, and Sarah Miller, the executive director of the American Economic Liberties Project. Let's start with some context. As of today, more than 72,000 Americans have died of coronavirus, more than the Vietnam War. Nationwide, we've confirmed over 1.2 million cases. Unemployment is at its highest level since the Great Depression. And even as states reopen, internal White House documents project that the daily death total will rise to 3,000 people per day by June 1st, more Americans than were killed on September 11th. But horrific as those numbers are, it'd be far worse if elected officials across the country hadn't shuttered businesses, banned public gatherings, and asked us to stay in our homes to slow the spread of the virus. However, shutting non-essential businesses has created another problem, an economic crisis worse than anything we've seen since the Great Depression. In response, Congress has passed emergency legislation that allocates an unprecedented amount of money to bail out businesses that are at risk during the pandemic. These programs are as diverse in their goals, implementation, and level of oversight. They're complex and they're incredibly important because they will determine the future of this economy. The program that's received the most attention is a $670 billion Paycheck Protection Program, which offers small businesses forgivable loans to keep their employees on payroll. What's received less attention is that Congress authorized $4 trillion, I can't even say, it's such a huge number, I can't even say it. $4 trillion in bailout fund to be overseen by Treasury Secretary Steve Mnuchin and the Federal Reserve, and which will mostly be used to bail out huge corporations and Wall Street. And this is just the beginning. Congress is preparing to pass another piece of coronavirus relief legislation. What's clear, and what is the topic of our show today, is that the coronavirus pandemic and the government's response will fundamentally restructure our economy. While some companies will survive the pandemic with little or no assistance, the government is now overwhelmingly responsible for deciding which businesses live, which ones die, and how wealth and power are distributed across our economy when this pandemic ends. That's a heavy responsibility, and it requires extraordinary, possibly unprecedented democratic oversight and accountability. I'd like to introduce California Representative Katie Porter. She's been pushing for oversight of stimulus money. In March, Representative Porter did the math and found that a full battery of coronavirus testing costs over $1,300, then secured a promise from the administration to make testing free. Thank you so much, Representative Porter, for doing that. I'd like to get started. You issued a report finding that despite the warnings of the administration, really detailed, what's happening with this crisis and the oversight. I'd really like you, if possible, to talk about, what you're learning from this oversight process and what you really want the American people to know about what's going on.
Yeah, so I have some general thoughts about oversight, and I can't wait to be in conversation with this great panel about that. But I want to start with the report that you mentioned, because I think it really illustrates where the oversight gaps are and some of the opportunities that we might have to fill them, despite this administration putting up some roadblocks to doing that. So we issued a report showing, using publicly available import-export data and government contracting data, to show that during the critical period of January and February, when the United States knew that the coronavirus was coming, that we were already having cases. We had the second case in the United States was right here in Orange County. During that critical time when we should have been preparing, increasing our stockpile, working on our distribution chain, in fact, during that time, US exports of things like face masks and ventilators increased by 22%, and imports fell by about 13%. So our exports to China of masks and ventilators went up by over 1,100%. It's hard to even get your head around a percentage that's a 4-digit number like that. And what's more concerning is we issued this report. We then got access just yesterday. We did the analysis to the Commerce Department data, new trade data, and it showed that this pattern of exporting PPE and medical supplies continued to rise during March. And so we titled our initial report, Everyone But Us. The United States clearly has a responsibility to try to help other countries and be part of solving the global supply chain, but we also need to make sure that we're doing it for ourselves. And because of the Trump administration's fumbling, we failed to do that. It's also clear, if you look into the report, that we can only go by dollar value here, not by quantity, because of how the data are disclosed, that it's very likely that some people, a handful of companies, were getting rich by selling these goods to the highest bidder on the global market, while the administration dithered about using existing tools like export controls and the DPA. So we sent another letter to the administration recently to Peter Navarro, who has been appointed the National Defense Production Act Policy Coordinator, to try to get complete information about what we're doing with this manufacturing supply line, both making use of what we have domestically, but also in terms of what we're doing globally, and how we can address these issues.
And have you received a response to that letter?
We have not. And it's interesting. I'm sitting here on the campus of UC Irvine in my house, and Peter Navarro used to be a professor at UC Irvine. And so we were, he departed the faculty, and yet I'm still having to engage with him. So he seems to be an ongoing thorn in my side in terms of trying to get information. We did have an oversight financial services call yesterday, a briefing, a bipartisan briefing, which is really important, alternating Republican Democrats, talking with folks like Ellen Lord, who is the Undersecretary of Defense for Acquisition and Services. And she did provide some initial information on the use of the Defense Production Act, but it's not important that I have that information. It's important that the public have that information. So people who are out there trying to get these supplies, governors, hospitals, other first responders, that we can coordinate this. So we need the visibility here into what we're doing with exports and imports and with the Defense Production Act.
What are Speaker Pelosi and congressional leaders considering in the short term to expand oversight of the stimulus programs?
So frankly, we haven't heard a lot about that. And it's been a bit frustrating. I think there are a number of individual members who are stepping up and are doing work. And so I offer you this report that we did that, like, using data that was out there. We're working on a bill that would provide a tremendous amount of transparency into the Paycheck Protection Program. And I would say that's a really big need. So we're going to hear from Bharat talking about what the Oversight Commission can do, but his charge is, and I'm correct me if I'm wrong, Bharat, but it's really the $500 billion that went to Treasury, which is then going to be leveraged by the Federal Reserve, by companies through the Federal Reserve lending facilities to be upwards of $4 trillion. So the Paycheck Protection Program doesn't have that kind of oversight provision and that kind of disclosure into it. So I think that's really important. So we're introducing legislation to do that. I think we should have done it when we added more money to the Paycheck Protection Program. But it's yet another day, so it's yet another opportunity for us to hear that the Paycheck Protection Program is running out of funds, and we're going to have to go back to either add funds or change the program. And I think there's a real opportunity here to not think about oversight as a gotcha moment, but to think about oversight as a real-time activity that can be used to improve the delivery of public policy. So what are the lessons from the PPP so far, and how can we improve and change them? We know that we have the select committee. The speaker did announce the members of the select committee on the coronavirus, but we don't have, the Republicans have not named their members yet. It's not up and running. And of course, the Oversight Commission, on which Bharat serves along with my colleague Donna Shalala, they still lack a chairman. Last I talked to Bharat, they still lacked funding. And so this is really hampering. We need to add tools, but we're also not making maximal effective use of the institutional tools we have. So I do want to say, I don't think it's right to say oversight isn't happening. I get up every day and I'm looking for somebody to oversee, like I'm on top of it. And a lot of members are. but I think it's the institutional oversight mechanisms that are struggling. It's the coordinated oversight approach where we need to be putting more effort into what we're doing and then how we're communicating that to the American people.
Can we talk a little bit more about that, about the institutional mechanism? So can you please explain, what's the difference between real-time oversight and the measures taken to date? And is real-time oversight still possible during this crisis?
Yeah, so this is such a great panel we've put together because I want to hear Damon's thoughts on real-time oversight and how that was or was not possible with his role on TARP. Because one of the issues with TARP was that was a financial crisis. I mean, it was also a crisis of the economy in general. It was a crisis for homeowners, certainly. But essentially, the money went out the door from the Federal Reserve overnight. We woke up and it was gone. And then a lot of the work of the Congressional Oversight Panel of COP was to try to understand where it went, how it was being used, if banks were actually making use of the money to do these things. Here we have a sort of interesting situation where we've given $500 billion, we've appropriated $500 billion to Treasury, and it's very clear that over $434 billion of that is just apparently still there. So there's actually this interesting question about if you needed this $500 billion so badly, why isn't it going anywhere? And if you don't need it, could you please give it back? Because I have so many small businesses and so many workers and so many localities and firefighting. I mean, there's a huge need for this money. And so this is sort of an interesting question. Like, I think the initial fear I had, and I don't know if Bharat felt this way too, was that the money would be gone before we could assemble and set up an oversight commission to actively oversee it. Instead, we have this odd thing where Mnuchin hasn't spent that money. And so while the airline industry has received its money, there were a lot more terms and conditions, checks and balances set out for the aviation sector than there is for this general money. So I would say, yes, there is still time. But I would also say this is about shifting the mindset of policymakers. And so you sometimes hear, Speaker Pelosi or other people will talk about, Jim Clyburn, my colleague, the distinguished whip, will talk about sort of the importance of rooting out waste, fraud, or abuse. And I want to say, I'm not really that interested in rooting out waste, fraud, or abuse. I'm interested in preventing that stuff in the first place, because by the time it's happened, we have had two really bad consequences. One is money went somewhere it wasn't needed. And in a crisis of this magnitude, we got to get the money where it's needed the first time around. We can't be afford to claw it back years later. The second big problem with rooting it out is once we have allowed waste, fraud, and abuse to happen, we've caused the American public, which is hurting, job loss, health insurance loss, small businesses are closing, community disruption, stress on our local government, so many of our institutions. It weakens their belief in government as an effective vehicle to help them. So the way to think about this is to prevent waste, fraud, and abuse, not to find it after the fact. And I think that's a really important difference between what I hope that Bharat accomplishes with his colleagues, what I know that Damon and his colleagues accomplished with COP, which is really trying to engage in real-time collaboration at its best. It's a partnership to try to make sure these programs are effective in the first place. Inspector generals, which I have tremendous respect for. I mean, I don't know about the rest of the panelists, but did you know there's a whole website where you can do nothing but read the accumulated reports of our nation's inspector generals? It's so cool. You can go on there and they're all collected into one site. It's like the inspector general hangout site. But they really are designed to be more after the fact. That really is the way inspector generals are supposed to work. And so I think the commission, the select committee, some of these other tools, the oversight committee on which I serve, we should be doing more real-time partnerships and really asking, how do we improve this going forward based on what we know today?
Absolutely. So I'd like to address the real-time partnerships. I'd like to bring Damon in on this conversation. And so for background, Damon Silver is policy director for the AFL-CIO, which is the largest federation of unions in the United States. Damon also served as the deputy chair of the last bailout congressional oversight panel. Now, Damon, you've mentioned your concern that affected companies won't use relief dollars to keep people employed. You've called for a program where money passes through directly to workers. Can you talk a little bit about this program and what?
John, you broke up there for a second.
Oh, My apologies. So I was saying, I was giving your background. You're a policy director for the
No,
AFL.
just the end of the question. The last sentence, the last phrase of the question got lost.
Oh, perfect. So you call for a program where money passes through directly to workers. Can you talk about what this kind of program would look like?
Sure. Well, let me, John, first, it's a pleasure to be with everybody here and with Congresswoman Porter, whose oversight skills I greatly admire, and with Sarah, whose leadership on the sort of issues of market power has been really inspiring, and with my dear friend Bharat, who has the misfortune of sitting in the chair I once sat in. Let me just, John, let me just first say a word or two about what Katie was talking about real-time oversight, and then turn to your question. In 2008, the Congressional Oversight Panel was put together as an afterthought, honestly. I'm not even sure whose idea it really was to have one. We didn't have subpoena power. We didn't we couldn't swear in witnesses. We had no power in the program, but we did have the power to speak. And that turned out to be the only power we really needed, at least to be able to do real oversight, to be able to prevent the Treasury from making fundamentally mistaken decisions. We did not have the power to do that. We couldn't stop them, but we could make it real clear to Congress and the public what those decisions actually were and why they were mistaken. And that is, I think, ultimately what that type of oversight is about. Now, in terms of the real-time nature of it, we came in, I think that Bharat and his colleagues are in a similar position to the one we were in, because while it was true, as Katie said, that the Federal Reserve made a bunch of moves kind of overnight early in the crisis, even before the Congressional Oversight Panel was put together, and we did not have jurisdiction over the Fed. We had jurisdiction over the Treasury. So an awful lot of what was going on in terms of bailouts in the financial crisis was formally outside of our jurisdiction. We found various ways to interact with and comment on the Fed. But the Treasury's use of the TARP money, which was what we had jurisdiction over, occurred in stages. And then once the money had gone out the door, it's true, most of it went out the door before our committee actually sat. But then they had to put more money out. And then there were decisions after decision after decision that had to be made about essentially whether to restructure the banks and what to do about the tens of millions of Americans facing foreclosure or with their homes underwater, meaning their mortgages were worth more than their properties. All those decisions went on and on and on, and we were able to do real-time oversight more or less with them. You can never do real-time oversight in the sense of being, unless the body you're overseeing actually wants to consult with you in advance, which they generally don't. You can never do real-time oversight in the sense of being able to act like the day that the government agency you're overseeing acts, but you can respond within days and within weeks. You can be in a constant kind of back and forth with the people you're overseeing, and I'm confident that that's what Bharat and his colleagues are going to attempt to do, and what the House Select Committee that Speaker Pelosi has put together will also do. Now to shift to your question about today. The core of what was going on, the core of what was wrong in 2008 and what was trying to be addressed was that a deregulated financial system had promoted a financial bubble through exploitative mortgages, and it essentially lied to everyone about it. And when the bubble collapsed, it took not just the housing finance system, but the entire financial system with it. And at the core of that issue was that you had trillions of dollars of mortgages on bank books that were and littered throughout the financial system that weren't worth what people said they were worth. Right? And the question of what to do about that and how to treat the homeowners who were the victims of that process, that question was the core question in the financial crisis. And as I said, it was botched, and the cost of botching it was very severe in terms of a prolonged recession and the public loss of confidence in our government. Today, the question is, as you said in your introduction, John, is a very different question. It's that we have a pandemic where basic principles of humanity and social solidarity require us to shut down large parts of our economy to stop the spread of the pandemic. At the same time, we ought to understand that we really kind of don't have any choice, right? That people will not engage in if we order people to engage in economic activity as if there was no pandemic, they're not going to do it, right? The first thing that has to be done is to get control of the pandemic. And social distancing is required to do that. We need to do that not just for not just in order to save lives, but in order to have a healthy economy. People will not engage in economic activity that will potentially endanger their lives. And so that's step one. But in order to do that, as you said, we've shut down large parts of the economy and we now have depression levels of unemployment. And we have a mortal threat to the economic fabric of our society, meaning to our businesses. It's the unemployment, it's the jobs, it's the incomes. That's the central question here, is how do we maintain the human and economic fabric of our societies while we shut down in order to get control of the disease. Jobs are in this crisis what housing was in the last crisis.
Absolutely.
And we've failed so far to get a grip on the jobs crisis for similar ideological reasons and interest-based reasons for why we didn't get a grip on the housing crisis last time. If you look around the world, there is a simple way to deal with this and it works. And that way is to use employers as conduits to keep people employed. Have government money run through employers and directly into the pockets of workers and keep people employed, tied to their employer, keep the employer intact while people are actually not working. That program called payroll supports is what works. It's been used all over the world except here. And instead we've got this patchwork of kind of half-built structures. We've pushed trillions of dollars through them to little effect. And what we need to do is do this right. And there are bills coming forth from Congresswoman Jayapal and a large number of other members of the House. I suspect that Representative Porter is a supporter of that approach. In the Senate, you've got everybody in the Democratic caucus from Mark Warner and Doug Jones on the right to Bernie Sanders and Elizabeth Warren on the left backing that proposal. You've got Republicans backing it. That's what we need to do.
All right, so how do we do this right? I'd like to bring my boy Bharat in. Good to see you, Bharat. It's been a while, but I appreciate all the work you're doing. So for a long time, you were the only person overseeing federal economic stimulus payments. You sent a letter 2 weeks ago to the Fed asking which companies are receiving government loans, what are the terms of those loans, and how is the Fed able to monitor what those companies do after receiving taxpayer support? Have you been given any answers? You're on mute.
Oh, sorry. I haven't gotten a formal response from the Federal Reserve yet, but what they did do was about a week after I sent them the letter, they announced that that they would be providing some information about the identity of the companies that were getting taxpayer-backed loans and the terms on which they were getting that loan. And importantly, they would release that information on a rolling basis. So every 30 days, you get an update on the companies and the terms. Contrast that to, as Damon, I'm sure we'll talk about, in 2008, the Fed did not release any of that information. They fought it tooth and nail, and eventually it took over a year before that information was actually brought to light. I think it's a basic fact of transparency, a demand of transparency, that if you're going to take $500 billion of taxpayer dollars and use it to support trillions of dollars of lending to private companies, that the public should know who those companies are and what the terms of the deal are so that they can evaluate whether they're getting a good deal for their money or not. So I'm glad that the Fed agreed to make those types of disclosures. We're going to have to look carefully at the first report that they put out to make sure that they're disclosing enough detail, because there's still a lot of detail that we'll want to know in order to be able to evaluate whether this is a good agreement or not. But the next part of it, and this is what both Representative Porter and Damon were talking about, is we need to track what happens at the company after they get this taxpayer-backed support. Are they taking the money from taxpayers and using it to provide executive compensation and big bonuses? Are they using it to do stock buybacks and to issue millions of dollars worth of dividends? Or are they using it to keep workers on payroll? Are they using it to rehire workers that they may have already laid off? Are they going to use it to keep workers attached to their private health insurance, which is obviously critically important during the middle of a health crisis like this? So my concern at the moment is that the way that they've set up these lending facilities, they are going to be pumping trillions of dollars into the hands of corporate executives and corporate boards. And at the moment, what we're saying is, we trust you to figure out how to use that best. And I think if you look back at how big corporations in America have acted over the last 10 or 20 years, what that tends to mean is that they take care of their shareholders and executives first. And we've already seen companies laying off thousands of workers and at the same time doing hundreds of millions of dollars worth of dividends days or weeks after they've laid off workers. Caterpillar, a big American company, just did that. Levi Strauss just did that. And so I think even in the middle of a pandemic, when everyone is trying to make sacrifices, you still see these big corporations looking out for their wealthy shareholders and their executives first. And so I think it's incumbent on the Treasury Department and the Federal Reserve to put strict conditions on how these companies can use this money so that it is actually going to end up in the hands of the workers who need it.
In a recent interview about you said that the stimulus, excuse me, and bailout money should go to support people who work, just like you mentioned. Now, companies like Ruth Chris initially took $20 million stimulus money, while Holy Grail Pub, a 26-worker grill in Plano, Texas, applied the day the funds came out. Its owners have taken out a second mortgage on their home and used retirement funds to survive.
Oh, John, sorry, you cut out there for a little while. Do you mind just asking the end of the question again?
Yeah, I was saying, as a member of the Congressional Oversight Commission, what are your strategies to ensure that businesses like Holy Grail Pub receive the funds that they need?
Yeah, so unfortunately, at the moment, our Oversight Commission doesn't have jurisdiction over the PPP, or that small business lending program. It'll be up to Congress to decide whether they want to extend the jurisdiction of our commission to cover that, because as you said, there are already significant problems with how that program has been administered, and in a way that has hurt truly small businesses like the one you mentioned, and that has had really bad impacts in terms of the racial disparities. And I saw an analysis the other day that projections show that 90+% of small businesses owned by Black owners may not end up getting support through the PPP, and the numbers are similarly high for Latino owned companies. So we've got a serious problem. It's going to be up to Congress, unfortunately, not up to me or my co-panelists to extend the jurisdiction of our commission to that. But I would just say, there's been a lot of focus on Ruth Chris getting $10 million through this program, and that probably shouldn't have happened, and it's money that could have been better used for smaller companies. But that $10 million is a drop in the bucket compared to the amount of money that's going to be going out the door to big companies through this Treasury and Fed program that our Oversight Commission oversees. We are talking about hundreds of millions, billions of dollars worth of direct support to specific big companies in the United States. And again, if taxpayers are going to be backing billions of dollars worth of support to specific companies, I think it's going to be incumbent on the Treasury and the Fed to assure the public that the money is going to be used to help the workers at those companies, and not just make sure that the executives and shareholders, who by and large have done extraordinarily well over the last 10 or 15 years, we don't want that money to just be about insulating them from taking any losses right now. They are the folks in society who are best equipped to bear some of a higher percentage of the burden right now. And we should not end up in this situation where during good times, shareholders and executives benefit the most and the first, and in bad times, it's workers who bear the brunt of the burden. So that's my main concern about how this program is developed right now.
Absolutely. Well, thank you for using your platform and the tools that you have. I hope you get some more tools, and we'll go back to Representative Porter see what that looks like. But before we do that, I'd like to bring in Sarah Miller. Sarah Miller, you recently spoke out in support of Senator Elizabeth Warren and Alexandria Ocasio-Cortez's merger moratorium. You said the CARES Act bailouts supercharged big corporations and Wall Street's ability to prey on and abuse small businesses and the communities they support. How does the CARES Act facilitate this kind of abuse? Can you explain that a little bit?
Yeah, this is a great discussion, and thank you for including me in it. I think just to step back for a minute, like Damon said, we had a crisis in regard to jobs and employment, and in regard to public health. And the dominant response to that crisis has been to execute a massive corporate and Wall Street bailout through the CARES Act, overseen by the Federal Reserve and Steven Mnuchin, who is, many of you will remember, the foreclosure king from the last financial crisis. So we are extremely focused on the structural effects of the CARES Act bailouts on our economy, and the negative repercussions that those will have on a whole host of social issues and questions, from job quality and wages to competitiveness in our markets, which is already in a really sad state of affairs, essentially. So one of the things that we have called for, and Representative Ocasio-Cortez rightly labeled it as the kind of least we can do, is to include a moratorium on mergers in this next legislative round. So what we are going to see, because for the most part, these bailouts did not include restrictions on corporate behavior in terms of stock buybacks, in terms of executive compensation, or keeping people on payroll. What we are likely to see is large corporations, private equity, overseeing kind of massive purchases of distressed assets and further consolidating the economy in the hands of a small group of incredibly powerful corporations and financial interests. And that, over the long term, is, I don't think I'm being alarmist and saying it is a catastrophe, not only for an economy that is producing more and more unequal outcomes, but also for our democracy, which is heavily corrupted by large corporate interests and Wall Street. So, as the least we can do, given that this is the situation we found ourselves in, we think that the Federal Reserve should not be financing a merger wave. So that is something that we're calling for in this next legislative action, and we've been encouraged at the receptiveness that's received. But I think, we are facing a humanitarian crisis where people cannot put food on the table, cannot safely go to work, cannot get tested, cannot get healthcare for their families. And at the same time, we are seeing the effects of an extraordinarily concentrated economy where big corporations have enormous amounts of economic and political power. And that is reflected, I think, in the response to this crisis, where we did see this huge kind of transfer of wealth and power through the Federal Reserve to the largest corporations. It was manifested in the response rather than the very practical approaches that Damon talked about in terms of payroll support and just figuring out how to test and trace and do the things that other countries are doing to more quickly return our economy to normal and keep people safe. So, we focus on kind of monopoly power and corporate consolidation in our economy. And we've seen, we are really concerned that on the other side of this, we're going to see an even more concentrated economy that's going to be driving even more kind of pernicious outcomes across a range of things that progressives care about. And I think because there are limited strings put on a lot of this lending, Bharat and others are going to need support in kind of keeping attention on what corporate actors are doing. Just last week, we understand that I think Boeing got access to $25 billion from the Federal Reserve and also laid off a number of staff. So I think we certainly shouldn't expect good behavior on the part of most corporations that are accessing this support, and it's going to require a whole community to understand what's going on, push back against it, and learn from this experience, hopefully to begin to reverse some of the trends that we're going to see.
Absolutely. Yeah, thanks so much for calling out that abuse. And I think most Americans would agree with you, right? So recent polling from Data for Progress and the Justice Collaborative Institute suggests that more than 7 in 10 voters would support a ban on corporations profiting off of the pandemic through mergers. I'd like to bring back Representative Porter. You've heard a lot, from this panel today. I know you guys have, a lot to do today, so like we're not going to hold you longer. But I want to give you guys some final thoughts. You've heard from these folks. What do you want to say to the American people? To the voters in this district. This in your district. These are complicated issues, but they're like super important to all of our livelihoods, right? So I wanted to give you an opportunity to just jump in with something.
Yeah, thank you so much. I mean, I just want to echo what Sarah said, and that you can see this manifesting itself within how the PPP program is working. So I woke up this morning, again, I said, I get out of bed, I'm like, what can I oversee? Where's the data? I got up this morning, and I don't know if you guys will be able to see this chart, but I'll just hold it up for people. This is new Federal Reserve data showing that the states with a higher share of community banks, so places like where I was born, Iowa, very high community bank penetration, also got the most small businesses, the highest proportion of small businesses actually got PPP loans. States like California, where I represent, where we have very, very weak community bank presence, large dominance by Bank of America, Wells Fargo, Chase, the other big actors, we have the very lowest share of our businesses that got PPP loans. So it's really an example of what Sarah was talking about, where if you don't have this vibrancy, if you don't have the choices, the different kinds of market players to serve different kinds of customers, when you try to deliver relief or you try to inject money into the marketplace, you end up reproducing some of the same problems. So it's just a really great illustration, Sarah, of I think your point, looking just at the banking sector and just at the PPP program, which is what we've done to date. I think it really makes the case that what we're going to see going forward is a lot of what you're talking about. I guess I'll just close by saying that, I spent my career helping families who were facing the loss of their home. And now I find myself, in Congress, having so many of the same kinds of phone calls about people who are worried that they're not going to be able to pay their mortgage, that they're not going to be able to put food on the table. And we are expanding unemployment. Congress has extended the amount, extended the time, increased the amount. We've added money to SNAP funding. But I really want to echo what Damon said about the importance of using a simpler structure to deliver relief. So I am a strong proponent, Damon, you guessed correctly, of the Paycheck Guarantee Program. And I have colleagues, ranging in views and experiences, Congressman Jayapal, Congressman Schiff, a huge variety of colleagues who support this, because one of the things I think we learned or should have learned from the work that COP did with TARP and all of the sort of being in those trenches is that really complex programs don't deliver in time. And so to the extent that we're trying to add some money to this and add some money to that, and what about SNAP, and what about unemployment, and what about small businesses, and what about medium-sized businesses, what happens is that you overwhelm the administrative structure, and we're seeing this with the SBA right now. So we're criticizing the PPP, but at least the PPP, the money got out. The SBA is just sitting on tons of applications. So the Paycheck Guarantee Program does a couple important things. It keeps people connected to their jobs. This is a jobs, public health crisis 1, number 2, a jobs crisis. So it keeps people connected to their jobs, which in our country keeps them also connected to benefits like healthcare, critically. The other thing it does is that so many people that I call constituents as many days as I can. I try to do it 4 or 5 days a week. When I get on the phone with them, they are often crying, upset, devastated at the prospect of having to seek help from social services and support programs. They often say to me, this is the first time in my life. I never thought I would need food stamps. I never have needed unemployment. I've always been able to take care of myself. The Paycheck Guarantee Program really addresses that by giving workers the dignity as well as the means to survive that they deserve during this pandemic. It's also going to allow our economy to pick back up and start so much faster. If we let everyone lose their jobs, the massive labor disruption that we're going to face will have racial and economic consequences. Older workers, workers 50, 55, 60, they may never have the opportunity to get another job. So I really am a strong supporter of that approach. And I'm very hopeful that in this next bill that Congress is working on, that we are going to move from kind of trying to reach for the small businesses and the big businesses, and then what happens in the middle is, and sort of the very small gets left out. But the Paycheck Guarantee Plan has the ability to reach across all different sizes of businesses and be distributed in a much more equitable and direct way. So I encourage our viewers to read more about that, to learn more about it. And if you do support it, to reach out to your congressperson or senators and let them know.
Absolutely. Thanks so much, Representative Porter. Looks like we're at time, but Sarah, Damon, Bharat, so good to see you guys. And I learned a lot. I know the American people did too. And we look forward to another briefing tomorrow. Thank you, guys.